Most losing trades actually start before the trade was even entered. And it's not because the strategy was necessarily bad, it's because there was no process or structure leading up to the trade. So over the last few years, I've spent a lot of time studying technical analysis, trading and momentum strategy, and reviewing a lot of trades inside of our community. And I see the mistake a lot. So in this video, I'm going to walk you through a checklist that I personally use before I enter a trade. So we're going to talk and check market structure, how I identify support zones, and then the indicators that I use to confirm confluence. So once you start following a structured checklist, I think something interesting is going to happen. You're going to start trading much more calmly. Instead of reacting emotionally to the charts, you can start evaluating things objectively. So you don't have to speculate, just have to watch the levels on the chart. So for this demonstration, I'm going to run through a checklist. And the goal of this checklist really is to identify, bullish stocks that are pulling back into support. So this is like the main framework of the strategy that I use. Now, if you'd actually like to gain a better understanding of the strategy, I'm going to talk various tools in this video. But below the video, the first link in the description, you can come and join our free Stock Trading for Beginners group on School. And in this group, we do live Q&A calls every week. And in the classroom, there is a trading course, the Momentum Trading course here, where in Module 3, we have a whole bunch of lessons about all the tools that I'm going to cover in this video. So certainly check out the link below and you can come and join our community for free where we go into more detail. So let's start with the checklist. So the first thing that I look at is market structure. This is really important to check first. So we want to check the weekly chart and maybe the monthly chart. And what we want to identify is higher highs, higher lows. We want a bullish trend, or at least we want a clear change of character. So for this demonstration, I'm going to jump to TradingView. We're going to actually look at a stock that we talked about in our group because it had a few good examples of some of these things that are important to watch. So we're on TradingView here. We're looking at the weekly chart. So all of these candles represent 1 week, and we're looking at UPS. So if we scroll in and we look at the present day of UPS, we can see that, since the bottom here in September 2025, the market structure has been actually a bit better. We're making a high, a low, a higher low, higher high, and higher low. So the market structure here is generally good. This is bullish. These are the types of charts that you might want to consider with this strategy. And if we zoom out, we can see that if we go all the way back on this chart, back to 2022, 2021, this is bearish market structure. So this high is lower than this one. This high is lower than this one. So we're making lower highs, and all these lows are lower as well. And if we just jump to the monthly chart, we can kind of see that as well. So now these candles represent 1 month. So the market structure here is bearish. We don't want to consider buying any stocks that have market structure that looks like this. Just move on to another stock and don't continue analyzing this any further. However, over the last, 5 months here, things are starting to look a little bit better, and maybe the trend is changing for UPS. So we've had, some good, decent market structure on the monthly chart. This month we are down in March, so we'll have to see how things play out. But the market structure is looking a bit better, so let's maybe continue on with our analysis. So one thing that you could notice that we mentioned a change of character. So this market structure has been bearish. Obviously, we never want to buy stocks that have this market structure. But right here with this candle in January, what we did is we have what's called a change of character. So if we just put on a line here from this lower high, this green candle actually closed above. And this is actually called a change of character and a signal in terms of market structure that the trend has potentially changed. This candle is now closed above this high that's associated with this last low. So we have a change of character and potentially a trend change. And what we want to do is look at the next few candles and we actually have a break of structure to the upside with this candle and a higher high. So the trend had continued. However, what we have here for market structure is we have a down almost 12% week where we made another change of character to the downside. So we'll want to watch this week's candle and the coming weeks to see if this trend continues down, or we could maybe negate this change of character in the coming weeks and sort of continue higher. What we don't want to see is, for this candle to come here, make a lower high, maybe make another low, lower high, and then lower low. So if we make another lower low, then that might indicate that the trend is going to continue down. So right away, we want to watch the next few candles with UPS to see if the trend can continue higher or if the downtrend will continue lower. So that's market structure. That's the first thing that we want to do. We want to quickly look at the weekly chart or the monthly chart and just identify that we're in a general bullish uptrend. So the next thing that we can look at is a technical tool that we use called the Ichimoku Cloud. So this helps identify the overall trend, and it does offer some support and resistance. So a general rule is that when price is below one of the indicators on this technical indicator, it will act as resistance. And when price is above a technical indicator, it will act as support. So let's jump over to UPS and we'll stick to the weekly chart and we'll put on the Ichimoku Cloud. So we'll put on our Ichimoku Cloud and we'll have a look. And we can see here that you'll notice price over the last few years has been below this red cloud, indicating a bearish trend. And price has never really been able to close above the blue or the orange lines here. So the blue line is the short-term momentum line, and the orange line is the medium-term momentum line. So with one quick look, you can just look at this chart and think, this is bearish. You don't want to buy anything that has a chart that looks like this. And you can see here that many times the stock closed a few weeks above the blue line, but then was rejected at the baseline and came back down, closed above the blue line, rejected at the baseline, came back down, rejected at the conversion line here, got above the conversion line for a few weeks, but couldn't get above the baseline and down again. So bearish trend, but it wasn't until, here we had a bullish candle and we back tested the conversion and the baseline for many, many weeks. And now we've actually stayed above the baseline. So this is a indication of a trend change. And then the conversion line crosses the baseline. So that's another indication. And the stock has done better. So it had done better. And what you want to really do is break above this weekly cloud and maintain the cloud as support. But we'll notice that we had a big red candle and we've broken back down to the baseline. Now we're in the cloud, and now we've actually flipped this baseline to resistance here in the present week. So we're March 11th recording this video. So we really want to get back above the weekly cloud for a good trend change. And currently we are in the cloud where things can be quite volatile and we're below the baseline. So based on the weekly Ichimoku Cloud, things are slightly bearish with this chart. We had some good progression here, but currently we've kind of come back down and we'll really want to get back above the weekly cloud. Now, if we change to the monthly, we can also see that we are currently below the monthly conversion line. So we'd want to get March back above this 102 level for continuation in the proper trend direction. We can see here these monthly candles, we hadn't been above the conversion line since back July 23. So that's an indication that, the stock is bearish. The trend is down, but now we spent a couple weeks above the conversion line. So we'd like to get back above the conversion line for the month of March. So after we check the Ichimoku Cloud and we can see in one quick look whether it's bullish or bearish, we can go and put on some moving averages. So we can put on the 50, the 100, and the 200 moving average. So here we're on the monthly chart. So let's just put on the moving averages on the monthly chart. And we can see that the last month in February, we actually closed above the 200-month moving average and we got rejected around this baseline. But this month, we opened and we actually went up and got rejected at the 200-month moving average. So that's acting as resistance at around 114. We've got this acting as resistance. So we currently want to get back above the conversion line on the monthly, and eventually we'd like to get back up above that 200-month moving average, which is acting as resistance at the moment. Now, if we jump to the weekly chart, we can also see that as price ran up and had some momentum, we broke above the 100-week moving average, back tested it. However, with this big bearish candle, we flipped it to resistance and we broke down. So when moving averages are downward sloping, they tend to not act as great support. We really want these moving averages over time to start to slope upwards, and then they become, better support. So we can see here that for 3 weeks in a row, we maintained it, but then we flipped it to resistance. And we actually came down this current week and we back tested the 50-week moving average as support. So high time frame support for this chart is going to be this 50-week moving average. So over time, that'll start to flatten out and rise, which will be good. So immediate support, and for maintaining this trend, we really want to stay above this 50-week moving average. We've got the 100-week moving average there as resistance. So we can look at those. We put the moving averages on, and we can see that one is acting as support here, and in the future, the 100 is going to be resistance. And that 114 is right where the monthly 200 is as well. So 114 is going to act as pretty good resistance for this stock in terms of the moving averages. Next, what we can do is we can draw a fib retracement. So we draw these from a swing high to a swing low, and we can identify some areas on a stock that are going to potentially act as more support or potentially more resistance. So for this chart, I've already have a fib retracement drawn out, and we have a few of them. And one that has been acting as support and resistance is right here on the log scale, 382. Price ran right up and got rejected right at that 122 level. And we've got the 236 at 104. So currently, that may act as some resistance. And this may act as some resistance again in the future. So support is at the 50-week moving average, and we've got some resistance at the 236. So again, we'd like to get back above this fib and back above the cloud for potential continuation. Now you can also turn the scale to linear scale and view these fibs as well. So we'll do that. We can see that we get some resistance right here at the 117 linear scale fib. So there's a bit of resistance around 114, 117. And then the log scale shows us some resistance around 120 right there. So in terms of where we are with the fibs and all the tools so far is, support is here, but, considering an entry, we really want to get back above the cloud and back above this 100-week moving average. So those are the fibs. We can use those to find resistance and support. And then we can also put on a Gann square and check that. So for this chart, I will just kind of remove everything so it's easy to see. And again, all of these tools that we're using for detailed sort of lessons on them, you can come and join our trading group. Again, it's for free. So, if I just jump over there, we have a course here where we actually have a full lesson on the Gann square, how to use it for a log scale, and so on. And again, you can come to our free group and get access to this course. And any questions you have in our community section, you can just post the questions and I answer them or other group members do. We've got weekly calls that we run every week where you can ask questions and join us on those calls. So the Gann square, we can use this tool as well to check if there's any immediate support or immediate resistance regarding the stock. So this particular Gann square that we've applied to the chart has shown some really good market symmetry. So if we go back in time, we can kind of see that this orange line here at $90 has been an important price in UPS. We can see price ran right up to this line and was resistance in the past, and then it broke out and we actually back tested it several times. We back tested it here in 2016. We back tested it perfectly here in 18, and we've back tested it, and we were in that zone in and around COVID. So again, these should be treated as zones as opposed to perfect price points. And then we ran up to the blue horizontal line, and look, you can see that 215 was resistance for many months. Here, an important level, and then the stock has just ridden this arc down. So the market symmetry with this particular Gann square has been quite good, and we can see that although UPS didn't stop directly at this 90, 54 level, it certainly came into this zone and further down a little bit, but this zone had acted as support in the past, and we can clearly see that it's been quite symmetrical with the current price. So in terms of where we are right now, if the market structure continues to be bearish, then we can potentially see that price may want to come back down into this zone in the future. So that would be an area to watch if the market structure continues to be bearish, or if we lose the cloud. So as we mentioned, when stocks get into this weekly cloud, they can really go within the whole cloud. So this might be an area to consider as another support zone if the stock continues to be bearish here in this zone. So that's the Gann square. We can put that on and just check, are we at resistance? Are we at support? So currently, it's not interacting with anything at the moment, but support would be sort of down here back in the 90 price range for the Gann square. And if we check our list, I think we've got one more indicator that we can try to use, the Bollinger Bands. So one thing to remember is that price doesn't need to react with all of these tools. What you want to do is just apply them and then stack the probabilities and find where potential confluence lies. So if some of these line up where there's a fib and a conversion and a fib and the bottom of the weekly cloud and potentially a moving average, then that's more probability that buyers and support is going to hold. But it doesn't mean that all of these indicators, you need every single one to line up. We just want to run through the checklist and see and make sure we're not at resistance and we are potentially at support. So lastly, we can put on what's called the Bollinger Bands, and we'll just look at the weekly chart here. We can see that currently price is not interacting with anything other than the 20-week moving average is at 103. So again, there's some potential resistance there. Potential support down at the bottom of the bands, 88. So again, that $90 zone, which was support in the past, may be support if we continue to be bearish. And then here we can just see that, price has ridden up the top of the bands, and generally that acts as resistance. So you don't want to buy when price is generally at the top of these bands. You'd rather buy at some support areas. So the Bollinger Bands there, that's how they are. And we don't want to buy the top band. We would rather buy the support areas. And again, you don't need every tool lining up perfectly. So that is our list. And then what we want to do is we want to, look at all those tools that we applied and evaluate for confluence. Do multiple tools point to the same support zone? And then ask yourself, is price closer to support than resistance? So are we closer? Are we above these indicators rather than below them? Are several indicators aligning in the same area? Am I buying support? Am I not chasing price? So we only want to buy support. And then the last step on the checklist is you can consider your entry size. So if you have a lot of conviction, then that can dictate how much you want to put on a trade. So the number one rule is only buy support, never buy resistance. And to recap here, we checked the weekly chart for the market structure and the monthly market structure as well. Review the Ichimoku Cloud, check the moving averages, draw some fibs, identify a Gann level if possible, check the Bollinger Band, and look for confluence. So if we were to do that really quickly here, we can see that the market structure on the weekly has been positive over the last several months. We do have a change of character to the downside here, however, so it would be important to watch the next few weeks to see if there's a continuation down or if we can have a couple weeks where they're green and we regain some market structure in and around this area. So that'll be important to watch in the coming week and the next week. And then we put on our Ichimoku Cloud, and we can see that we're below the cloud, near the bottom of the cloud. So that may act as support in the future, but we are below the baseline. So we'd really like to get back above the weekly cloud for a good trend change. We put on our moving averages. The 50-week moving average is acting as support, but there's not too much support below. And the 100-week in the future may act as resistance, and it's starting to look like it might be sloping upwards. Same with the 50-week moving average. So we really want to stay above that 50-week moving average. And then we put on our fibs. We can see that there may be some resistance at around 104. That coincides with the Bollinger Band 20-week moving average as well. And then the linear scale fib offers potentially some resistance up into the 117 area there. And then lastly, we've got a Gann square where there is going to be support at the bottom of the cloud and this $90 range, which has been an important price in the history of UPS. So taking this checklist, looking for an entry, certainly, personally, I wouldn't be looking at entering here. I would rather UPS get back above the weekly cloud, back above some of these moving averages, and potentially these fibs, and really mark this cloud as support. And on a monthly as well, we really want to get back above the conversion line in order to indicate that the trend is going to continue. So certainly wouldn't be a buy for me, something you might want to watch in the future. The stock has been bearish for so many years. You'd probably want to wait for some good trend confirmation, getting above this weekly cloud. Obviously not financial advice, but that is how I run through the checklist to determine if there is a good entry for this stock. So if you'd like more information on the strategy that I sort of ran with here today, we went through it quite quickly, all those different tools and the checklist. Obviously, it'll be more beneficial if you can learn those really well. Again, in our trading community, you can find a link in the first link in the description below the video. You can come join for free. And again, you can ask questions. You can come on a weekly call that we do. And in the classroom, you can come take this free course. And in module 3, we run through lessons on all those tools that we just covered. So I hope that you found this useful, and I look forward to talking with you in the next video.